The market was talking about a series of highs for the last year and a half. But really, it wasn't until April that we hit highs in real terms. In January of 1980, gold hit $850 an ounce. And that is a little bit shy of $3,400 in today's money. So we didn't pop that figure until April. And I think what makes it different now is that we have a different monetary regime. Volcker and it was just coming into power, and that's why the market dropped after that. Also, the geopolitical risk climate is different. We have more entrants, and we have a very types of entrants into the market. Right. And we just have a lot of elevated risk. And what is interesting is that this is occurring aside very powerful equities. So a lot of the buying in gold is safe haven.
Paul's got 8 questions centered around what to buy next at the jewelry store. Let me just ask a dumb question. In everything else in the world, if price goes up, we make more of it. That's the way Adam Smith told us things work. Alfred Marshall told us that. If the price is up, are we mining more gold?
Well, we can't. Well, we are mining a bit more. But mining is a very long process, and it depends on a very long investment cycle. Say, by the time a couple of geologists say, I think there's some gold here, it can be 10 years before it goes around your finger. It used to be 5. Sometimes it's much, much longer than that. And so there are constrictions to how quickly you can raise production. You can change grading and things like that. But really, it's set on these long-term cycles. What is flexible is recycling. And I think all the time I've been covering gold, the recycling market has steadily risen as a greater percentage of the share of supply. And I would bet that at this price, we've got some potentially significant recycling that could come online.
How does that work? Where do we see recycling? How does that happen? Do I just go to the guy on the corner and give him my ring for cash?
It goes from that level. It goes from gathering up all the jewelry in your house because we're at record highs, or it goes right up to old bars that may be cracked, that may not be London, what we call London good delivery. Okay. Which is the only type of bar that HSBC and other bullion banks will be. London good delivery.
So that means it's a high quality bar?
That means it's been assayed and produced by a verified LBMA, London Bullion Market Association.
Nice.
Entity, and they've said this refinery is correct, and therefore you know what you're getting. So it goes from there right up. But there is a lot of gold in the world, and it can be mobilized at high prices.
Bloomberg Surveillance, James Steele of HSBC with us, definitive on gold, red and green on the screen right now. The metal, Sweeney following this tick by tick, 4,073 up $3. Paul?
Just amazing. Who's buying gold at these levels, do you think? Is it just the ETFs? Is it central banks? Is it all the above?
Well, I think what we have seen is less retail demand. Okay. Small bars and coins have suffered greatly under these higher prices. Say, for example, if you had bought a coin at $1,500 an ounce, which you could have just a few years ago, you probably won't buy another one or at this price, or you may even hand that in. So if you look at what's being produced by the mints, it's quite low. And a lot of coins are coming onto the secondary market, and also small bars. I mean, the 10-gram bar is the favorite bar in India, a very small bar, well over 100,000 rupees. It was 35,000 rupees just a few years ago. But to say who's buying, it's heavily institutional. Okay. Asset managers, all range of people who are seeking diversification.
Giovanna Bracecci was on today on Gaza and Israel and President Trump, and from Dubai. And I once visited quickly the Dubai Gold Souk, which is how you consume in the Middle East. It's totally different, folks, than the jewelry district in Manhattan, Tiffany's, et cetera, et cetera. In Asia, in South Asia, at the Dubai Gold Souk, how has gold at 4,000 changed the cadence?
Well, about 50% of all gold that's bought in the world is in jewelry form and physical gold, and 70% of that is in the non-OECD world. and that demand is down double digit, and it was down double digit last year. So we have this severe reaction in the jewelry market, as one would
I'm doing
expect.
the math in my head. You just said 70% and 60%, which is 40% of the gold consumption is non-OECD jewelry.
That is correct. And half of all the jewelry bought, half of all the physical gold bought in the world is divided between India and China.
And what did they buy it as a store of value? Did they buy it as a hedge? Did they buy it as they just like
Well,
it?
there's a traditional historic relationship with gold. I mean, traditionally, gold has been more popular in places, and I'm not saying India or China have weak institutions, so please don't think that. But historically, gold has been more popular
Yes.
in places that have had higher inflation, less
Right.
stable governments,
Okay.
things like that.